It's the final edition of Business Incorporated for the week, and it's good to have you. I am BC Adebayo. Coming up on today's program, Johannesburg Stock Exchange suspends trading on Owando shares, and the pilot strike at South Africa's low-cost Mango airline ends. Plus, the African Development Bank unveils technology for African agricultural transformation to help African farmers. Well, let's head straight to the markets now, beginning from Africa, where the indices are looking mixed at intraday. Nigeria's oil share index is down 0.03%, while the South African Bourse is up 0.54% at intraday. And talking about South Africa, barely 48 hours after the Nigerian Stock Exchange suspended trading on the shares of Owando PLC, the Johannesburg Stock Exchange has done the same. The JSE hinged its move on an exchange of correspondence between it and the Nigerian Stock Exchange. And justifying its action, the South African-based exchange was quoted to have said that the company has received communication from its primary listing, the Nigerian Stock Exchange, that the Securities and Exchange Commission had issued a directive to immediately suspend the trading of Owando's shares, a directive to which the NSE has complied. The suspension will be on pending clarification following the review of subsequent correspondence received on October the 18th from the NSE and the SEC, and will provide a full statement of the company's position as soon as possible. Well, back to the numbers now. In Egypt, we see the blue chip index gaining 0.9% on Thursday. The Kenyan Bourse also closed 1.1% lower on Thursday as the country prepares for the presidential rerun election next week. And the Gulf markets are closed for the week, but banks led the Saudi Arabian stock market higher on Thursday after Riyadh Bank reported better than expected earnings for the third quarter, while builder Drake & Skull jumped in Dubai. The Saudi stock index climbed 1% to 7,011 points. The Dubai index climbed 0.75% to 3,672 after Drake & Skull, which has attracted renewed interest since it completed a capital restructuring earlier this month, gained 5.3% to 2.01 dirhams in heavy trade. In Abu Dhabi, the index edged up 0.07% to 4,505.31. Qatar's index rose 0.3% as Qatar Islamic Bank gained 1.5%, and that's after reporting a 10.9% jump in third quarter net profit in line with analyst forecasts. And European markets were slightly higher this morning as earnings season and political turbulence in the region continued to dominate discussions. For more on the markets, let's talk to Conrad Bussen, who joins us from the Frankfurt Stock Exchange. It's good to see you, Conrad. Well, this has been a very busy week for the financial markets. We've seen new record highs for stocks on Wall Street and also in Frankfurt. And on this last trading day, trading is driven by hopes for tax cuts again. So tell us, Conrad, how justified is this optimism?
Well, I don't think it's very justified. Look at the German share index DAX, the level it's trading on right now. This is not far away from the all-time high levels, but this is very much of a sideways movement. This really looks like investors are very hesitant to believe that those ambitious tax cut plans in the United States will eventually materialize, and for good reasons. The US Senate passed the blueprint yesterday for those tax cuts at the most narrow majority imaginable, only 51 to 49 votes. One Republican Senator, Rand Paul, even voted against it because he complained about excessive spending that comes along with those plans. Then this proposal also have to go through the second chamber of the U.S. Parliament, the House of Representatives. And, you know, House Republicans already have expressed recently that they wouldn't pass a tax reform if it came along with a higher state budget, with higher state spending. And as it looks now, this blueprint would come along with a higher budget deficit. So there is a lot of reason to believe that this outline will find a lot of obstacles, and it might eventually end like the US Republicans' effort to overhaul Obamacare, to do healthcare reform. This didn't end up anywhere. and there are doubts whether this will really pass.
Now, the Spanish government has threatened to revoke Catalonia's autonomy, but in terms of the Brexit negotiations, there seems to be some progress as EU officials say they are starting an internal preparation for the next phase of Brexit talks. Is this positive?
Well, somewhat, yes. Internal preparations, that means that the EU team is getting ready, or internally it's getting all the preparations done that they need when the so-called phase 2 of the Brexit negotiations eventually start. What this doesn't mean is that the phase 2 is about to start. Many parts of the phase 1 part of the negotiations have not been settled yet. For example, the very important question about future payments of the United Kingdom for the European Union, for example, for pensions of EU officials that already are, not working for the EU anymore, but where the United Kingdom still has obligations for their pensions. That's only one of the topics that hasn't been settled yet, and the EU already made it pretty clear. Phase 2 is only about to start after the most important parts of phase 1 are finished. And notwithstanding, the very polite and conciliatory tone of the UK's Prime Minister Theresa May in Brussels yesterday and today, this is not a position that the EU looks likely to change.
Now let's talk about corporate earnings now. PayPal, the internet payment service, had a stellar third-quarter performance. How has this been rewarded by investors, and what other quarterly reports are worth mentioning?
PayPal's share price here in Frankfurt is up 5%. Very good example of an internet company with a global reach that really manages to benefit well from its business model. Another important quarterly earnings report today, Daimler. It came in more or less in line with what market had predicted, and the share price is not really moving. So I don't want to talk too long about it. What I do want to mention is a company that is probably not very much known to most of our viewers in Nigeria, but it's an interesting story. Sixt Leasing is the largest car leasing company here in Germany. The share price is down more than 11% after the quarter earnings reports because Sixt Leasing said that it has problems with its diesel fleet. The diesel scandal here in Germany has caused the prices, if you sell older diesels on the markets, those prices have dropped so much that Sixt really has problems selling those cars. So the diesel scandal has arrived in German business. And one more reason why it's worth mentioning this 11% decline of the shares of Sixt Leasing. This is an indicator that not many investors are driving the market at the moment, and that markets are very nervous on this very high level. An 11% decline of a share, that's really a sign to be careful.
Well, we'll hope that that's reversed in the coming days. Well, thanks, Conrad Bussen, for talking to us all through the week, and have a great weekend.